Parkland, the big fuel seller, gas station operator, refiner, has been under pressure from Engine Capital, an activist investor, to clean up its portfolio, sell off non-core assets. Well, they are selling a business right now. They're selling their propane business and their Canadian propane business for cash of about $115 million. I think we have natural gas in there, probably should say propane, but of course propane is essentially made from natural gas. And they are selling it to an outfit called Avenir Energy, and they have an exclusive deal to supply the fuel to propane for a decade. And the president, Ian White of Parkland, saying this is a big step towards achieving our target of $500 million from the divestment of non-core assets by the end of 2025. Toronto home prices dropping for the first time since January. The decline was 0.4% in May. The city's real estate board says the market is still adjusting to the impact of higher mortgage rates. Overall, the number of homes sold fell for a fourth straight month, but new listings rose. Now, the Bank of Canada just cut interest rates, of course, by 1/4 percentage point. Let's get Jason Mercer, the chief market analyst at the Toronto Regional Real Estate Board, to wrap it all up. Jason, start off with today's interest rate cut. Not a huge move. It'll presumably just have an impact on house prices at the margin.
Yeah, I mean, certainly, a lot of home buyers or would-be home buyers that, have been on the sidelines for the last couple of years and certainly through the first half of 2024, it'll be welcome news because I think there's a lot of these households that have every intention on purchasing a home, but they need to see, tangible evidence that the Bank of Canada was indeed cutting rates and they should expect to see borrowing costs trending lower, especially on the variable side as we move through the second half of this year and even more so into 2025.
Is it fair to say the Toronto real estate market is pretty moribund right now? We got just 7,000 sales in May, down 22% from a year earlier.
Yeah, that's in line with what we were forecasting. I mean, when we put out our market outlook at the beginning of February, we had said, 2024 will likely be a bit of a tale of two halves, if you will, where we're going to continue to see some slowness due to high borrowing costs. But in the second half of this year, anticipating, the Bank of Canada making this move that it did today and starting to see people move back into the market. Now, it'll be gradual. Some of our consumer polling undertaken by Ipsos suggests that, there's a lot of different scenarios out there for households. Some just need to have that sort of psychological shift where they see rates are going to trend lower. Others need to see, still a substantial downward trend in rates before they move back into the market.
I'm looking at an article on betterdwelling.com. They follow the Toronto real estate market. They argue that since the peak in March 2022, the price of a typical home in Toronto down almost 16% or $200,000. It's quite a decline.
Yeah, well, I mean, we saw quite an uptick in borrowing costs, and so something has to give. And so to mitigate the impact of higher borrowing costs on a homeowner's monthly payment or a home buyer's monthly payment, as it were, we've seen prices adjust downwards. And so there weren't as many buyers in the market. There's more choice for those that were still active. And so people were able to negotiate a lower price than what we saw, coming into the beginning of 2022 before the Bank of Canada started its cutting.
So it looks like the listings are piling up, but the buyers aren't there. I mean, is there a slide going on in Toronto real estate right now?
I think when you think about how sellers, so existing homeowners and home buyers are behaving, there's been a bit of a mismatch in timing. I think that a lot of homeowners were anticipating to see an improvement a little bit sooner as we moved into the spring market. But with borrowing costs now trending lower, I think we'll start to absorb some of that built up inventory.
And do you have any sense on what types of homes are finding it hard to obtain buyers? Is there a surplus building in any particular type of housing?
Well, I think certainly, if you think about the segment of the market that's most sensitive to borrowing costs, that would be first-time buyers. So people that are perhaps renting right now, again, coming back to some of our polling results, we found that there's a lot of people who said, even if I see $1 more increase in the rent I'm paying right now, I'm going to be taking a close look at purchasing a home. And so certainly with lower borrowing costs, I think you'll see more current renters looking to move out of that rental accommodation and into the ownership market.
Houses are taking longer and longer to sell, and that's bad news, isn't it? Because if a house is a long time on the market, it kind of becomes self-fulfilling, doesn't it? People wonder, well, what's wrong with it?
Well, it gets back to the choice I was talking about earlier. And so, as we've seen inventory levels remain, relatively high, especially compared to sales, that does give buyers more negotiating power. And so as a result, you can see a given listing remain on the market longer than, say, we would have seen in 2021 or 2022, because both buyers and sellers are kind of coming to terms with market conditions. And if people don't get a deal done on one home, they see that there's other options down the road.
And just finally, we are seeing prime rate cuts by big banks today. That'll tend to bring down variable rate mortgages. Is that good news in terms of solidifying demand?
Yeah, it's interesting. I mean, we've already seen relief on the borrowing cost front when you think about fixed rate mortgages, because credit markets were anticipating the Bank of Canada making moves in the second half of this year, and that started. So people that are looking more at that variable rate side of the mortgage market, I mean, one of two things is going to happen. If they have a mortgage where their payment adjusts, then they'll start to benefit from that in terms of the actual dollars that they're paying each month. Otherwise, if the payment remains fixed, they're going to be putting more towards principal over time.